It can be scary, especially when you're seeing crypto drop by as much as it has over the last couple of months. In addition to that, when you see something as blue chip as an altcoin being Terra Luna drop by more than 80% across the last few days, it is a cause of concern. So if you are worried about what happens to crypto next, what are the levels I'm looking at personally before I start executing and buying some more, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now at the moment, we're going through a massive correction. We've had some capitulation over the last few days, and to be honest, I didn't really feel like I wanted to make more content because YouTube was flooded with thumbnails from all these influencers talking about how the bear market is here. And the reality is, we've been in a bear market for a while. I've been sort of saying it on the channel for the last couple of months that, hey, I don't think we're gonna see all-time highs. We've seen prices retrace by more than 40, 50% across most of the cryptos as well as Bitcoin. So for me, in my mind, it was very clear that we were going to kick the can down the road, possibly 6 months to 9 months before we see any sort of consolidation before moving higher. Now, the levels I am looking at, I will talk about later in this video, but what I want to share with you is my exact strategy when it comes to this bear market. Am I scared? No, I'm not, but it does suck when you see your portfolio get drained, lose 30 to 40% across a few months, and then not know what to do because as soon as you sell, it seems like that's when it pumps. And that's what we're trying to avoid. We've heard it time and time again where you should be greedy when others are fearful. I think Warren Buffett said that. But the reality is you can't just keep buying the dip because the dip keeps dipping. I've mentioned this in a video before as well, where we get so caught up with people saying, I bought the dip on Twitter. But in reality, you don't know how much they spent with the dip. As well as that, you don't know what the average price is when they were going through these purchases. So in my opinion, you've got to look at your own strategy and you've got to look at what feels right to you. Because simply going out there thinking that
this is the lowest that Bitcoin can go, I'm betting the family farm on it,
only to realize 2 months later it's lower than that, and now you have some expenses that require immediate attention. Now you're in a bit of a shit show. Now my strategy is that I don't know how to time the market. As much as I can watch technical analysis for hours on end, even they haven't got this right. They can go out, use moving averages as a guide, but to be honest, no one knows exactly what's going to happen with Bitcoin or cryptocurrency next. What we do know is the long-term horizon of this space is that Web3 is going to play a big part of our everyday lives. Now that could mean that there's more volatility now, which means potentially more upside, but it does mean that if you are after something a bit less risky, a bit less volatile, then you're probably sitting this market out for the next couple of years. For me personally, as you guys know on this channel, I have a real estate portfolio. That's where I built majority of my wealth. It's my foundation, it's my bedrock. So despite me knowing that crypto could return a 10x or 20x, I know that I want to keep a large portion of my portfolio in real estate. And I will continue to build up that position, so definitely do subscribe as I share that journey with you. So if I'm not timing the market, I want time in the market, am I continuing to buy every dip? Well, I've got a different method. It's called dollar cost averaging. Wow, surprise. You've probably heard this a few times across people doing it in ETFs and shares. But again, a financial disclaimer, I don't know what's going to happen next. Nobody knows what's going to happen next, especially when it comes to crypto. You've got to realize what your risk appetite really is before you go out there and execute to buy every single dip. Now for me, I have a very simple strategy when it comes to times like this. I like to focus on things I can control. So I like to go in there, work on my business, work on my Patreon group, and give as much value as I can helping clients, which I do through the buyer's agency. But when it comes to crypto, at the moment, when things are moving sideways, chopping up and down 10, 20%, but no one really knows the clear, distinct move, I'm going out there dollar cost averaging. Now I've got 3 steps that I want to share with you guys that addresses everything that I want. Now step 1 is I go onto CoinSpot, and that's where I'm dollar cost averaging through a reoccurring buy. And all this means is that it continuously goes out and purchases a set amount of crypto that I want every single periodic time. So in my case, I like to do it every single week. So CoinSpot will go talk to my bank and then have that fund come across and then continue to buy it up. Now, if you are new and you don't have a CoinSpot account, it's probably the easiest exchange to actually use. Definitely go check out this video, which is a step-by-step guide of how to get started from setting up your bank account with the exchange and how you finally buy some crypto as well. And if you are new here, link in the description will get you $10 free Bitcoin if you use my code as well as the affiliate link there. So step 1, I'm purchasing reoccurring buys. Step 2 is then I want that crypto to work for me. Now at the moment, CoinSpot doesn't have the staking opportunity where you can stake Ethereum and Bitcoin. It is coming soon, hopefully, but at the moment what I'm doing is I'm transferring some of that Bitcoin and Ethereum out onto Celsius. Now I've spoken about Celsius on this channel as well. I've even had an interview with the founder. Definitely go check out this video. This shows you exactly how I would set up the staking in Celsius. It's actually very easy, and that's the reason I use it, because for me it's frictionless. I want the ease of use and the least amount of barriers before I actually go and action something. I know, much like yourself, you might be going,
well, if there's 6 steps involved to earn a little bit extra, I'm probably not going to do that.
So in this case, it's a simple 2-step process. Definitely go check out that video because it will definitely help you. Now, there's a link in the description below. When you deposit $400, you'll actually get $50 worth of free Bitcoin when you have that. So if you go onto CoinSpot, you sign up there, you get $10 free Bitcoin. You take that across here, you can earn another $50 worth of free Bitcoin as well. So I've addressed the reoccurring buys that I dollar cost average with. I've then go and stake that, so I'm earning interest on the actual coins that I have. And then my third process is actually using the Bamboo app, and that's where I have a micro investing strategy as well. Now they can DCA as well, where you have a portion go in, and I've explained that in this video as well, which is a step-by-step tutorial. As you can see, I've got the videos on this channel. You can go out there, just spend an hour to 2 hours getting all of this stuff set up, so it just works in the background. For me, I don't need to think about these things. I don't need to go and time when things are dipping. It's just going out there, periodically buying, and when things dip, its average price actually gets lower. With Bamboo, what I love is that it's a micro investing app. So if I'm spending, say, $7, it will round it up to the nearest $5 or $10 and then invest that into Bitcoin, Ethereum, and gold. So for me, when I'm going out there and I'm dollar cost averaging into these things, I'm not just focusing on Bitcoin. For me, I have a long-term conviction around Bitcoin and Ethereum. Apart from that, who knows what could happen. You could have another issue like Luna and you could pretty much get destroyed if your whole portfolio is in something like that. So for me personally, I like to hold a large allocation of Bitcoin because long-term I have conviction around these two being around for the long term. Now, over the last couple of months, I actually haven't been buying a lot of crypto at all. Apart from my Bitcoin and Ethereum recurring buys that I've got set up, as well as the micro investing, I haven't gone out and bought too many alts. The only altcoin that I was buying was ApeCoin. Now, before you sort of go,
what the hell, you're buying a monkey coin? I was taking you seriously up until now.
You should definitely go check out my NFT channel. There's a link in the description below for that, where I did talk about the use case of ApeCoin. Now, I mentioned this in my Patreon group, and some of the people made $10,000 to $15,000 in the matter of a week. And that was just purely knowing what was the use case and utility behind the Ape token and how it was used for an actual auction that was coming around the corner. This was information that was around, but it wasn't common knowledge. So there was a really good arbitrage there for people to make some money. So when you take a step back and you look at what's happened with Bitcoin, crypto, and Ethereum over the long term, well, it's trended higher over time. Similar to real estate and commodities, the devaluation of our currency that it's getting measured against is continuing to drop. We have high levels of inflation, and although in the short term that means volatility for markets like this, I believe being invested into markets is probably better than being out of the markets. Now, in a situation like this where there's high risk, high volatility, and people having a large amount of uncertainty, it's okay to cash up. I mentioned this in the video here where I'm talking about actively cashing up because we may find ourselves in a recession. And I was talking about this a few months ago. Looking back at 2018 as the most famous bear market for our times when it comes to crypto, we can sort of gauge an indication of where we could probably land if a similar pattern played out. And based on those moving averages, it's more likely that once you pass through your 100-day moving average, you're probably going to drop down to the 200-day moving average. And at the moment, that's anywhere from about 25k USD all the way up to about 28, 29k USD. This does change every single day. So for me right now, I'm not buying any dips. I'm not buying any altcoins. What I am doing is I'm dollar cost averaging. And if I hit certain levels on the way up, if we do get some sort of relief rally, which we could potentially get in the next couple of days, then I will take some chips off the table and then reload in case we do have a full-blown capitulation down to those levels that I mentioned earlier. As always, if you have enjoyed this video, definitely drop a like for the video and share it with someone that might be freaking out right now, but there is definitely a light at the end of the tunnel. Sometimes we need to zoom out, separate the emotion from the logic, and stick around when most others won't stick around. This is when we are going to make the most amount of money, especially if Bitcoin and Ethereum actually work out to be the long-term play. If you are interested in more content, definitely subscribe. And if you want more NFT and metaverse content, definitely go check out my second channel. I'll catch you guys in the next one. Thanks, guys.